Hey guys, it's Josh Brown. Welcome to an all-new edition of What Are Your Thoughts? This is the first edition of 2021. Super excited to be back. I'm here with Michael Batnick as always. Duncan's in the house. I'm dressed like Eric Cartman. We got viewer topics. The Knicks are the 7th seed in the Eastern Conference playoffs already. Everything's happening. Stick around. Let's see what's going on. Okay, Mike, welcome back. Happy New Year.
Hey, Josh. You look like Kevin McAllister from Home Alone.
My kid in the car this morning told me Cartman. I think I'll take Kevin McAllister.
It's not bad.
A rapidly aging Kevin McAllister. The first thing I want to talk about is Bitcoin. How could we talk about anything else, right? It's like this is like the thing, right?
Bitcoin is the thing. Before we get to that, just speaking of Kevin McAllister, I know this is a digression. I was listening to Home Alone, the rewatchables. Did you know that Joe Pesci was in Home Alone and Goodfellas in the same year?
No. Really?
Is that like
Really?
wild?
What a year. That's like
Anyway, Bitcoin.
quite a year. Where is it now? I know like it's hard to report on Bitcoin's
32?
price. 32,000. So I think it went to 35 and then back to 30 and then bounced. Is that in the last 24 hours? Is that right?
It's 31. It's 31.5 right now.
Okay, why couldn't it just go to 50? There's no reason, right?
Why not?
Like why couldn't it go to 100,000? What would stop it? Like
I don't know.
That's where I think we are with this.
This is my take. I don't think you need to know much other than, and Wiesenthal has been all over this. It's a religion, and it's very much like Tesla. There are no sellers. I mean, it doesn't mean that price can't go down 35% in 2 days. That probably will happen at some point. But for the foreseeable future, the demand is so much stronger than supply because the hodlers think it's worth $3 million.
Did you
right?
read?
Like they're
Did you
never
read,
selling.
Did you read what Nick Majuli wrote this week? I thought it was really good.
I did.
So he's saying like why Bitcoin is here to stay, and I think this is really what you need to know. The problem with arguing that Bitcoin is going to zero is that there are too many investors who are willing to buy it at a price far above zero.
Exactly.
So that's not going to change. So
Correct.
take zero off the table. But so now he's saying you have people that said when it was at 10,000, I want to buy it, but I'm not buying it till it drops to like 1,000 or 3,000. So
that was me. I said I was a buyer at 2,000. I ended up buying at, I don't know, 8,000.
So right, because what happens is people have, he's calling them mental buy limits. And when the price goes up, your mental buy limits go up. And I know that doesn't sound scientific, and it isn't, but Wall Street sell-side analysts do the same thing, right? They have a neutral rating on Facebook at 80. It goes to 180. Well, they're not going to quit their job. So they have to find a reason to say, okay, it's a buy, but I would buy it at 150. Whereas before at 80, they didn't want to buy it at all. So this is basically how the Wall Street bullshit factory already works.
I don't think that
Bitcoin's right at home.
I don't think you're allowed to quote behavioral finance experts.
What do you mean?
You're not allowed to quote Charlie Munger or use any behavioral finance quotes in any tweet from now on if you think that Bitcoin is going to zero. Like if you don't understand the psychology behind it, I don't know shit about blockchain. You don't need to. Like that's not what this is about.
Yeah, this is the thing that the perma bears I think got most wrong about Tesla. They were like completely right on all of the fundamental challenges Musk was facing. They were
Not relevant.
They were completely right on the cash crunches and all of the reasons why Tesla was going to struggle with delivering car. At the end of the day, if more people wanted to pay higher prices for the stock, that other stuff there was time for it to have been worked out. And I guess by this point, largely it has been. But I agree with that point. Don't short religions.
That's it.
Very difficult game to play.
Doesn't mean this can't go to 10,000 in 2 weeks, but like, why would you short this thing? I don't think you even can, but
look,
that's
I'm not
right.
like a Bitcoin nut. I own some. I can't imagine any reason why this rally is going to stop right now. I think it's too early. All right. What did you want to do? What do you got?
So I don't know if they're dumping treasuries or we're buying so much of it, but if you look at, there was a chart in the FT, foreign holdings of U.S. treasuries has slid to a 20-year low. And wasn't this like one of the mega worries is what happens when China dumps our treasuries?
Yeah.
And hasn't that happened? And what happened to rates?
Yeah, all the late night comics who were like, "Oh, we owe everything. We owe it to China, or we're in debt to China."
Yeah, that was like a mainstream joke.
Yeah, they need new material because The Chinese have been selling since, I think, 13, or net sellers since 13 or 14.
So foreign holdings peaked in around '08 at 55%, and now we're at around 35%.
Yeah.
Where did rates go from '08 to today? Which direction?
Straight down. LOL. So what's actually happening is that the Fed is buying the treasuries that foreign governments are selling, and our insurance companies, our pension plans, our retirement funds are buying these treasuries. So yes, the debt overall is exploding, but we owe it to ourselves, which I guess is probably better than owing it to a foreign adversary, because it's in hands where, there's some confidence that people want to continue to hold it. And if you're a retirement fund, you're probably not using treasuries for the current income. You're using it for the offset to the other risks that you're taking. I just don't foresee us having a bond vigilante situation homegrown. Like all of a sudden, American investment funds start dumping treasuries because they're worried about the creditworthiness of the treasury. It's very, very unlikely, in my view, that that's going to be the thing that precipitates a crisis in the bond market. So I think it's okay.
There was talks yesterday about potential tapering. I mean, very, very early, but I feel like the Bears would be salivating for something like that. A repeat of what year was that? Was that 2013? 13?
S&P lost 6% in 2 days.
It was by the way, I remember that was in May. I think May 2013. It was a quick 2-day loss, and we ended up the year, were we up 32% that year?
Yeah, it was a huge tragedy for stock investors.
What do you got?
But I think that was Bernanke. I'm pretty sure that was pre-Yellen.
It was 100% Bernanke.
Holy shit, the taper tantrum. I think I have a T-shirt from that episode. So you did a post, and I agree with every word of it, which is advice on giving advice. And you're making the point, like there's literally nothing you could say to someone who randomly, casually asks you for your advice on their portfolio.
There's no upside.
There's no upside, and you're saying lessons cannot be taught in the stock market. They can only be learned through experience. There's a lot of stuff in life that's like that, but I think this is totally true. But even beyond lessons, run us through these scenarios. Somebody says, all right, I'm in Bitcoin. It's at 32,000 right now. Do I add to it, or should I keep holding it? Run us through the scenarios. What happens if you try to give them your view on that?
There's four scenarios, and they all end up with you losing. You tell
Sounds
somebody,
good.
yeah.
I'm in.
You say, yeah, buy. And then it goes down. You're wrong, and they're never going to forgive you.
Yep.
Right?
Okay.
They ask you to buy, and you say, yeah, buy, and it goes up, and then it's their idea, so they forget that you said yes.
Right.
You say, don't buy, and it goes down. They forget the next day.
They forget
You
what?
say-
They forget that you said don't buy.
They forget your good advice just to tell them not to buy.
Yeah, you don't get credit for that.
No, it was
Right.
their choice not to buy. They knew it was a bad investment. Or you said the worst case scenario, you say don't buy and it goes up. You're wrong and they're never going to forget. So I had 2 experiences like this recently, and I don't do this. You must get it way more than I do.
Every day
But
of my life.
When somebody asks me for advice, I clam up and get awkward, right? And like they must think I'm an idiot because they're like, aren't you in the financial services industry? What are you talking about?
Yeah.
But so a friend of a friend of a friend worked at Tesla, had all these shares.
Oh my God.
Asked me at like $500 what to do. This is after a parabolic run. It was already up like 400% from the bottom.
Yeah, it went from 100 to 500.
Yeah. And then they say, what do you do? I'm like, listen, I don't know you or your risk tolerance or how much you own versus how much you have in checking save. Like, I don't know anything about you. Like, I know you can't see the future. I'm like, no. I really and truly, I don't know if this was me. And I'm like trying to say like, well, what feels worse? You sell it and it keeps going up. That's one scenario. Or you don't sell it and it goes down. What feels worse? And to me, the obvious answer is you don't sell it after a 500% run. It goes down and you feel like a greedy pig. To me, that's the worst feeling. That's like the worst feeling of regret. So they're like, okay, that makes sense. So I was like, right? So yeah, probably sell some. It's at 750.
Right.
It's at 750.
And
so
you
if
weren't
I
even
ever
saying sell it. You were just saying, like, you were just trying to put them into that position so they could feel it in advance.
So if I ever come across this person ever again, they probably think I'm an asshole. It would be awkward. My brother-in-law texted me a month ago about Bitcoin. This was after like it doubled in like a month. And he said, this guy is an artist. He has nothing to do with finance at all. He said, what do you think about me buying 1 share of Bitcoin?
A share of Bitcoin? Get the out of here.
This was at 17,000 after it doubled in like 3 weeks. So I'm like, listen, I don't know, man. I can't feel good about telling you to buy here. Maybe wait for a pullback if you really want to, but you might not get one. Now it's at $32,000 in his mind. I just probably cost him 15 grand and I'm an asshole.
Yeah, why would you do that? That's terrible.
So
he could have owned a share. He could have owned a share of the hottest cryptocurrency company. You took him out of Bitcoin.
So I know my advice for giving advice will probably fall on deaf ears, but there's no upside, like zero upside.
All right, here's what I do. Someone's like, "Yo, what do you think about this Tesla? Should I keep holding it, or what do you think? Should I buy gold? Should I sell gold?"
You have a good shtick. I think I know what you're going to say, but what do you say?
I will give them like an hour on all the reasons why anyone they ask is going to sometimes be right, sometimes be wrong, and that this is the wrong way to invest, and that diversification. I'll give them an hour. Like I'll cancel dinner plans.
Don't. No, you
yes,
don't.
I do. Yes,
no,
I do. And then after this absolute tongue lashing that I've given this person, right after just this complete whipping behind the barn, I'll get real close. I'll say, all right, but now here's the deal: buy Tesla.
All right, LOL. But here's what you actually do.
I will do that. Sometimes I'll do that.
I've seen what you do. Here's your move. You say, like, you probably know more about this than I do. And that's a great way to disarm somebody.
Oh, yeah. All the time I do that because I don't know individual companies that well. I know some, the ones that I'm invested in.
That's the answer.
Yeah. My shtick is, look, I know what I know, and you probably know more than me.
Shake Shack.
Yeah.
You know, like what temperature to order the beef.
I know how to order. All right, what do you got?
Gavin Baker did this good post where he spoke about this idea that mania is often at the end of a calendar year. And I think maybe the knee-jerk reaction would be to dismiss that. But I think there's probably something to investor psychology turning over on January 1st. So he gave the example of the run-up in the Japanese stock market during the 1980s, the biotech craze of 91, the Nifty 50 in 72, all fizzled around the start of a new year. I think we saw something similar in 2000. I think that didn't peak till March, but close enough. What's your take on this?
Well, if March is close enough, then I don't know.
All right, fine, not close enough. What's your take?
It's bullshit. Think about how many bull markets peaked in September and October, because I can give you a whole litany of bull markets that ended around Labor Day. So it's like selective. And I was there for a lot of the ones that he's talking about, or at least for the 2001. It very definitively was not over in January. I think the NASDAQ went up another 1,000 or 2,000 points.
Actually, I think the Dow might have peaked in March. I'm looking right now. Oh, no, it did peak in March. All right, so S&P too.
Like very definitively, it was not over in January. So even the example that he cites.
It rallied all the way back to March highs in September and August. So yeah, that probably does count.
It was different stocks. So after the website stocks blew up in 2000, there was a huge tech comeback. It was the optical stocks. It was like JDS Uniphase and Sienna. And it's not worth getting into this whole story.
All right, so bottom line, you're not buying this.
No, it's nonsense. But the better thing that he wrote in the same piece, so I read it. I didn't read it last week. I think I read it the week before. The better thing he wrote was about client alpha. This is like, I'm going to do a post about this. Client alpha is the idea that having the right clients who are aligned with what you are trying to achieve as a fund manager is critically important. Otherwise, capital is often taken away at the exact wrong time. Buffett was able to stay in the game in 1999 because he had permanent capital. All right, we don't have permanent capital. We're an RIA. We're not an insurance company. But I think one of the things that we've always said was like, if your clients aren't going to stick with you for the moment that you're doing the rebalance into a disaster or whatever, like you could be the best advisor on earth. It doesn't matter. Like you did not affect outcomes. So he said, this is one reason being a good communicator is important to being an investor if one is managing external capital. You can't have client alpha if the clients don't understand what you're trying to accomplish. And he's saying like Buffett was the best communicator ever. That I think there's a lot of truth to, no?
By the way, I can't prove or disprove this, but I do think there's something to investor psychology starting a new page in January. I really do.
How?
I think the calendar resets. I think the brain resets.
But January is almost always a good month in the midst of a secular bull market. Like very rarely will January be the worst month.
Listen, I got no proof. It's my opinion.
I think when summer ends, moods are more likely to change than when December goes into January. But we'll run the numbers. We'll see who's wrong and who's right.
I just need to find 1,100 more bears to agree with me.
Fair. In Georgia. All right. I want to do the Comedy Store doc with you. You gave
Where
me this.
are you?
I finished it. I finished in one sitting. I sat.
Dude,
It's the best thing I've ever seen in my life.
it's seriously no bullshit. Like, I think I'm going to watch it again. It's one of the best pieces of doc whatever I've ever seen.
All right. So just to back up, the Comedy Store is on Sunset Boulevard, legendary place. Pauly Shore's mom started it in the 70s, and like every one of your favorite comedians had that as their home base, at least their West Coast home base. There were very few New York comedians in this, Mike. There was no like David Tell was in it for 2 seconds. Sarah Silverman wasn't in it.
No Seinfeld.
Seinfeld barely.
She hated Seinfeld.
Who? Mitzi Shore?
Mitzi.
Yeah.
But they got everyone for that doc.
Everyone's in it.
Like Letterman, Jim Carrey, Damon Wayans. Seeing Joe Rogan and Leno and Whitney Cummings sitting around that table and shooting the shit was like...
Oh, that's what I wanted to ask you about. All right. So the last episode, they did this round table on the roof of the building with Leno, Rogan, Whitney Cummings, and then 4 comics that probably have no money. And I wanted to ask you, like, what is the vibe like sitting, like, they have like these lifer comics that have been performing at that club forever. I'm sure they do okay. I shouldn't say no money, but no money compared to Leno. Like, nobody has any money compared to Leno. But like, imagine Rogan and Leno both started in the same club you started at. You each spent a decade there or whatever, and you look at where they are. How do you even function mentally?
That was sort of surreal watching that.
Like,
you know what? Yeah, I don't have an answer for you. That must be just bizarre. Is the only thing.
How much did Rogan sell his thing for? Is 100 million or 200 million?
Yeah,
I don't even know.
100. You know what I was thinking in the last episode? How it showed all the comics now have podcasts.
Yes,
it's like the NBA. Like, talent won. It used to be ownership and the platforms that had all the power. Now it's talent.
One of the comics, I don't know if it was Mark Maron or one of the comics on the doc that was talking about the podcast was like, you know, the ability to say things and you have no boss. Like, no, like somebody fire him, can't fire him. It's his own.
Right.
You know, I think that's been I don't listen to a lot of the comic podcasts because I think a lot of it is just them wandering and like seeing if they can come up with something for the stage in real time. And that's like a lot of noodling for me. But I listen to Bill Burr. He has no boss.
Oh, Bill Burr was heavily involved in the doc.
Heavily involved.
So good.
But his podcast, he has no boss. But then you say, well, wait a minute, though. He's now has like a regular appearance on The Mandalorian. He kind of has boss, right? All right. Where are we going next? What do you got?
All right, my last topic. Michael Sembalest in JP Morgan Asset Management did their guide to the markets for 2021, which is always amazing.
Yeah, he's so good.
And these charts were interesting. It showed the level of supply for U.S. stocks and non-U.S. stocks. And the asset shortage, I think, has been a marked out thing. And I think a lot of people subtweet and like think that's a joke or bullshit or whatever. But he said since 2011, this is JP Morgan, since 2011, the pace of U.S. buybacks and M&A have exceeded the pace of primary and secondary U.S. equity issuance.
I've been saying this shit for like 7 years.
As a result, the stock of investable public equity has not grown as it normally would. So when institutional investors rebalance, supply constraints accelerate the market's rise. Note that while this is true in the U.S., an equity shortage is not present outside the U.S., where net supply is still growing. And I feel like that scene, when I read this, that scene in National Treasure, when he like sees the map and he's like, could it really be so simple?
I have a
You know what I mean? So since 2011, U.S. stocks were up 254%. Equity ex-US is up 57%.
So I have a post from like 2012 or something. Ladies and gentlemen, the stock market is shrinking. So Mark Dow is right. And now here's what's really interesting. For the people that said the only reason the market's going up is buybacks, well, buybacks fell off a cliff in 2020. Like for obvious reasons, corporations said, okay, our priority now is conserving cash. It's not buying back shares, which is ironic because you would have bought back shares at pretty good prices in March and April, but whatever. In the first 3 quarters of 2020, share buybacks were down 40%. So they were about $266 billion. They should have been way higher. And then cash levels at corporations went up like crazy. So corporate cash levels are up 36% through December of last year to $2.5 trillion. That's up from $1.8 trillion in the fourth quarter of 2019. So in other words, you're going to see buybacks now come back this year. We're going to shrink even further. Yeah. I don't know.
Unless
go ahead.
IPO booms continue, but they can't even offset the pace of buybacks.
Not even close. A big month in IPOs is like a regular week in buybacks.
What did IPOs do last year? 80 billion? 100?
It's a big number, but you have to keep in mind that a lot of that was SPAC issuance, which technically
I think SPAC was half or more.
Yeah, but that's technically cash until they consummate a deal, and then that becomes M&A. So you got to like back that out. It's a little bit tricky to do an apples to apples when more than half of the deals are just cash deals. I don't think that private equity is as developed in outside of the U.S. as it is here. I don't think it's as big relative to the size of those markets. I might be wrong, but I think I've read that it's not. And the buyback situation is obviously people don't understand the differences in tax rates in foreign countries have a huge impact on investor behavior and the makeup of markets. Like, did you know that if you own an ETF in Ireland, you pay 41% taxes on the gains in the ETF and any dividend that it pays out? So if you were an Irish wealthy person, you wouldn't own an ETF, you would own land. Those things happen in every country. Like that weird one example, there's a million examples of that all over the world, which makes for differences in multiples, in markets, in investor behavior, et cetera. So I think we underestimate that.
Did you know the human head weighs 8 pounds?
Did you know the fastest land mammal can run up to 60 miles per hour, Michael?
Duncan, let's move on to listen to questions.
I want to do viewer topics. Let's go.
Okay, hey guys, happy 2021. So first up, Josh, Ali asks, do you think it's a good idea in my 20s to just pile my money into a concentrated portfolio of 5 to 10 stocks?
No.
What if they're the right stocks?
Oh yeah, no, definitely do the ones that are going to go up though. If you're going to do that, just try to think that way. I don't think it's a good idea. I don't think there's anything wrong with taking 1 or 2 concentrated positions, but most of your money should be as spread out amongst stocks as possible. I don't advocate for bonds at that age, but like own a lot of stocks and just like concentrate on saving money and putting it in. Don't concentrate on the return you're earning on that first lump sum that you're putting in. So I really think about your process more so than your profits on the first buys you make.
Okay, Jeff writes, I've been up way later than I should be trying to figure out if I got duped. I'm 35 and 7 years ago, my friend set me up a variable whole life policy in which I pay every month. Obviously, if I just put the money to work in the market over the last 7 years, it would have doubled basically, but I can't go back. Am I just stuck in this now?
Do you want to tell him, Mike? Should I tell him?
I don't want to say you got duped.
You don't? Okay.
These multi-billion-dollar companies have a lot of really sleek marketing and firepower behind them, so it's not your fault. But what
that's
you can
his boy,
do,
that's his boy though. It's not like somebody on the street sold him a whole life policy. He's saying it's his friend. That's what's keeping him up at night, I think.
What you can do, and this is a shameless plug, but call us and we could help you out with the details and we could figure out what to do with your policy.
Well, I'm laughing, but it is true. We do help people
for real.
with that. Yeah. And sometimes the right answers do nothing. I think it depends on the situation.
I started my career as a life insurance salesman. I didn't sell a single policy, so
crushed it.
Yeah, but they're not great.
You couldn't even sell one to like a relative, or you didn't try that hard.
No. I bought one, of course.
Did they make you, when you started, did they make you make a list of all your friends and family that you could pitch life insurance to?
There's nothing more. There's like no more humiliating moment in my life than looking back on that now to the people that I reached out to, not knowing what I was doing. You know what I mean? Like the fact that I did that.
Yeah, I could relate to that.
I'm sweating thinking about how embarrassing that was. But that's exactly what they do. Like literally, that is exactly what they do.
Don't feel bad, because one of my first jobs after college, or during college rather, like a summer job, was cold calling. And literally I was selling over the phone, not selling it, but like, would you like to speak with a senior broker about getting involved in the Callaway Golf IPO? the Snapple iced tea IPO, the Boston Chicken IPO, and then people would be like, yeah. This is 1996 or 7. There was no internet. Like, this is what you did. And then I would make that connection to the senior broker. The senior broker had no intention of pitching them Callaway Golf because he didn't have it. So I spent a summer doing that, an entire summer of my life. So don't feel bad. There's always worse. All right, you guys keep them coming. We're getting a ton of these questions or topics, and a lot of fun combing through them. And so if you want to submit a topic for what are your thoughts, feel free to send an email to askthecompoundshow@gmail.com. One other thing I want to mention really quickly before we get out of here today, who's in on the Wealth Base Beat the Compound game? I assume most of you guys are in. We're having a lot of fun. It's about 2,500 players currently in the game. I am in the bottom quintile right now, as is Michael.
Ben's getting roughed up.
Is Ben in the bottom like 5%?
I mean, he's a target date guy. He has no business picking stocks.
That's great. It's so much fun. All right. I'm doing terribly. My son is doing better than me.
It's early. It's day 2.
My 11-year-old boy is crushing me on day 2. So that's where we are. We're going to be doing something on Friday. I think we're going to try a live stream right here on the YouTube channel. We're going to look at the leaderboard. We're going to give some people some shout outs, see what's going on in the game, what trades are working, what trades aren't. So stick around for details on that later. That's all we got today. Thanks for joining us. We'll be back next week. Go ahead and smash that like button if you haven't already. Subscribe to the channel. Tell your friends. We'll see you next Tuesday.